Been binge watching funding videos on YouTube or Instagram clips, made that $10,000 deposit into your account, and you're just waiting for the confetti to pop from the ceiling, red carpet to be rolled out, and endless approvals for your business. And the crickets kick in, and you're still waiting. The reason $10,000, $20,000, $50,000 in a single deposit in a new business checking account does not make a difference in 2026 in your funding approval odds is what we're going to be covering in this video. You're seeing video after video from funding guru after funding guru, constantly telling you how you need to open that account and establish that relationship, make that specific deposit amount, and wait your 90 days out to get these mythical results on your funding request. And they don't work, or it's not working as advertised. There's a reason, and this video is going to clarify for you. Welcome to the invitation. I'm JP. I'm going to be your business banker and your capital strategist going forward. So I'm going to be giving you context as to why, as bankers and banks, we're not impressed by single deposits or even a couple deposits broken up into a new business relationship, and why that doesn't necessarily qualify you for the perks and benefits of relationship banking when submitting business lending requests. You need this information more than ever, because that is the number one parroted thing in the funding space is, oh, you need to get outside of those data points and establish that relationship. And these geniuses tell you establishing a relationship is making some lump sum deposit and just sitting pretty for 90 days to 6 months and then applying. Some of them even tell you to go for it after 30 days. You will not get the results that you're being told you will get. So we need to break down how banks evaluate you. We need to break down what they're actually looking for. We need to tell you why that strategy of relationship banking is ineffective. And we need to decorate and lay out for you what it looks like to establish a functioning, healthy relationship with a financial institution that will actually improve your approval odds. So follow through with me. So banks don't just evaluate money in itself, all right? They evaluate cash flow, revenue consistency, expense management, the industry you're in, banking habits you have, and business activity. All of this is being gauged. Almost none of that can be gauged from you making a single or a couple of deposits over the course of a couple of months and then going for an application. Cash flow beats cash every time. Think about what I just said. Cash flow beats cash every time in the eyes of a financial institution. So this is going to be key. A company with 30,000 moving in and out on a monthly basis is often more attractive than a business that makes $100,000 single deposit and sits it and forgets it, because banks learn from activity. When you establish a relationship, what I think is missing, what I know is missing for a lot of these funding gurus, and the reason is because they don't come from a financial background, so they only know so much about what they're talking about. The whole point of relationship banking is to reduce risk. How the hell do I know that you're lower risk if there's no activity to gauge? How do I know what I'm getting into if I only have a one-time experience with you? It's not that hard of a concept to get your head around. So yeah, $100,000 deposit sounds great. Oh, you were able to let it sit for 3 months or 6 months and not touch it. Looks great, but it tells me nothing about how you manage money, nothing about your in and outflows, nothing about your activity, which means I have next to no data to assess risk. So what relationship banking actually looks like, we're going to break this down into some bullet points as well. Regular deposits, payroll, merchant processing, ACH activity, wires, bill pay, business credit card usage, treasury products, conversations with your banker. Wow, imagine talking to a human being. Asking questions before you apply. Learning more about the financial institution that you're submitting your application with. Go fancy that. So why internet advice falls short? This is going to be a great opportunity for you to understand the difference in this channel versus a lot of channels out there that are in the financial and funding and the business lending space. The 10K, 20K, 50K rule is oversimplified. Seriously, point blank period. It's oversimplified. There isn't a magic numbers. Banks evaluate the entire relationship. If you submit a $2,000 or $3,000 deposit, but you're showing consistent organic banking activity, you are going to beat out somebody who puts $20,000 or $30,000 in and just sits in there and then walks in and tries to apply 90 days or 120 days later, almost every time, if everything else is the same. You're going to have a much better experience because the bank actually has data on you. All right. How to build a relationships banks value. All right. Bank consistently. Deposit business revenue. Separate personal and business finances to the best of your ability. Use the banking services. I talked about this a lot on my other channel. You guys sleep on digital engagement. There's a bunch of tools and resources available to help you monitor your credit, budget, plan for your wealth goals. And you guys are just thinking these are just cute pop-up sections in your app. No, the bank is giving you tools to use so they can learn more about you and develop a better relationship with you. And they're just exchanging value in the process. Meet your banker. How about regularly? That would be great. Update them quarterly. Ask for advice before you need money. That's the secret sauce. Banks don't gauge relationships based on one deposit. That's not how they measure it. They're going to gauge the relationship and measure it based on how you operate over time. So comment relationship down below. Kept the video relatively short and sweet because honestly, completely crushing this theory was easy work. It's stupid. It's not true. It's not effective. I have to be raw and uncut with you. Comment relationship down below so you can understand just like the basic human interaction of, oh, I just had this one-time great experience, so now this person's my best friend or they're my mate or whatever the case may be. The bank is the same thing. The bank is made up of human psychology collectively. It's an institutionalized human psychology. There's nothing different about how they're going to think, how you would think. You wouldn't gauge a relationship with a person off of a one-time interaction if you're smart. You would want consistent activity to determine the risk level of that person in your life. The bank is no different. So comment relationship down below. Let me know you got the value from this, again, relatively short but value-packed video. And let's move forward, making better decisions and establishing actual healthy organic relationships with financial institutions so we can have long-term sustained success and not fleeting overnight success. How about that? Let me know if you appreciate that in the comment section down below. To all of my new viewers, welcome in. Again, this channel is actually birthed from my self-published book, my first book, The Invitation, Bridging Banking, Credit, and Capital, providing the insight and information for you to navigate the financial system and the banking system effectively and on a sustained basis, and also helping to shift the framework that has created the gap between financial institutions and our communities. It's valid and it's understandable. My book addresses the historical context and hardships that led to the insecurities and the distrust that we have, but it also taps into why it is so important for us to meet banks in the middle and financial institutions in the middle to reach our financial goals, just like banks need us to reach their goals. So my book is a great read. It's in the description section down below, and it is what this channel is derived from. Get in the About section if you want to learn more about me as a financial professional with 15 plus years at the time of this recording and experience across the banking and financial industry, and much of it serving entrepreneurs and business owners like yourself. Other than that, I appreciate every one of you tuning in. Like, comment, share, subscribe, support the channel and the video so the channel can continue to support you. Other than that, I want each and every one of you to stay focused, stay in motion, and I'll see y'all soon.